Good morning and welcome to the Business Standard Morning Show. This is Debarghe Sanyal and here are the top stories for the day. With Reliance Jio making a disruptive entry into the telecom sector, 2017 and 2018 saw Airtel, Vodafone, and Idea Cellular raise allegations of predatory pricing. But the CCI had rejected the allegation against Jio. And by the time Airtel and Vodafone Idea received some relief, it was too late. Jio had grabbed its targeted market share. Now, as the 5G services are being rolled out, the old allegations are again doing the rounds. So, why are Indian telcos pointing fingers at each other? Bhashwar Kumar dials the experts for answers.
With over 570 districts covered in just 6 months, India is seeing one of the fastest 5G rollouts in the world. So, the wait to watch your favorite Netflix series on mobile without any interruption will soon end. Or it may have already ended if you have subscribed to 5G. But did you know that behind the scenes, telecom service providers are at loggerheads? Vodafone Idea recently approached the Telecom Regulatory Authority of India or TRAI, alleging that Reliance Jio and Airtel were engaging in predatory pricing with their unlimited 5G offers. Seeking action, VAI said that because they are significant market players, Jio and Airtel cannot offer 5G services for free, and that too for an unlimited period of time. Replying to the charges, Jio and Airtel claimed that they cannot be accused of predatory pricing because 5G rollout is still underway and the number of its users is very small. The two telcos also claimed that nothing is being offered for free, as 5G services are being charged in accordance with the 4G packs they are being provided as a part of. A telco is considered to be engaged in predatory pricing if it offers below-cost services in a market where it has over 30% share. A telco becomes a significant market player if it has more than a 30% share in terms of subscriber numbers, revenues, traffic volume, and network capacity in a circle. Both Jio and Airtel meet this condition in most circles, and Vodafone Idea reportedly offers unlimited packages at low tariffs in the 5 or so circles where it is a significant market player. Of the 1.14 billion Indian mobile connections, Jio commands the highest market share at 37%, followed by Airtel at 32% and Vodafone Idea at nearly 21%. A financial daily, meanwhile, reported that TRAI is also looking into whether tariff and broadcast rules have been violated by some of the fixed-line broadband plans of Airtel and Jio. The regulator has sought responses from the two telcos on this. Recently, Airtel had also approached TRAI to prohibit differential pricing by telecom operators for content on their apps if the same content was available on DTH and cable TV channels. The trigger for this had been the free telecast of Indian Premier League matches by Jio on its Jio Cinema app. In its response to TRAI, Jio claimed that Airtel's complaint was a malicious attempt to defame its consumer-friendly tariffs. So, what has sparked off the latest battle? The answer on the 5G front is clear. While Jio and Airtel have been expanding their 5G networks since October 2022, cash-strapped Vodafone Idea is yet to start its own 5G rollout. As of March 3rd, Jio had rolled out over 4 times more 5G sites than Airtel. Amid all of this, experts have said that Vodafone Idea will increasingly lose market share to Jio and Airtel.
So the lower prices that Jio is insisting on continuing with is something that makes the other two players less competitive in the marketplace. And also they feel, and I don't know if there is evidence of that, that these prices that Jio is charging are below cost.
Pricing has always been under forbearance, which means the regulators do not interfere. But every time when existing revenues of existing players come under threat, then there is some sort of a noise that happens around predatory pricing. And this time around, it's Voda Idea who are making the noise because they're the worst hurt.
Meanwhile, analysts say that fixed broadband could trigger the next leg of growth for Jio and Airtel. What does the tussle between the two mean against this backdrop?
Airtel has a distinct advantage over Jio for being earlier in the fixed broadband market, and now a high-speed fiber is coming into play. They want an entrance into the market, and therefore they're being very aggressive on their pricing, and that's hurting Airtel. Now, whether it's predatory or not predatory has many connotations to it, and I'm sure regulator will take a view.
The battle over alleged predatory pricing also points to the state of competition in the telecom sector.
We were a duopoly to begin with. We became an oligopoly. From oligopoly, we became a perfect competition. From perfect competition, we again became an oligopoly. And now I think slowly we are inching towards becoming a duopoly again, especially on the higher ends of technology, 5G, 6G tomorrow, and fiber for that matter. I think we have two large players. That's how we are shaping up.
Ultimately, how will you, the consumer, be affected?
Is there an imminent threat of price rise? I would say probably not. Now, what the lower tariffs reflect is the reality of what the average consumer is willing to pay. Particularly an Indian operator must recognize this reality about the price sensitivity of the market, despite the fact that the competition is lower than it used to be.
Vodafone Idea's charges against Jio and Airtel may not hold. But a more substantial solution is unlikely at present, since TRAI cannot take full action in predatory pricing matters without the Supreme Court restoring certain powers to it.
Meanwhile, for cricket fans all over the world, Monday was an occasion for both celebration and nostalgia. It was Sachin Tendulkar's 50th birthday. While the legend left the 22-yard about a decade ago, he continues to rule hearts and screens even today. While most sportspersons have short shelf life post-retirement, Tendulkar still endorses 15 brands. Let us flip through old Pepsi ads and brush the dust off our action shoes to see how Brand Sachin still rules. It was the late 1980s and cricket was warming up to a new talent. Still a minor then, a Mumbai boy had started to show a steely edge behind his boyish demeanor. He loved the Yorkers and had the ability to salvage tricky situations. Johnson & Johnson's Band-Aid was the first product that Sachin Ramesh Tendulkar endorsed, and there was no looking back since then. Soon, Tendulkar had some of the most prominent brands of the 90s under his belt. However, it was Tendulkar's 1995 deal with Mark Mascarenhas of WorldTel that really opened the floodgates. With a 5-year contract valued at nearly 30 crore, brands like Adidas, MRF, Philips and Visa were coughing up in excess of rupees 1 crore for annual contracts. Old faithfuls like Boost and Pepsi too had to escalate their offers in line with the new numbers. Meanwhile, on the field, Tendulkar was now opening the batting in one-day internationals and was doing so at his brutal and dominating best. While we have also had older legends like Kapil Dev and Sunil Gavaskar endorse products, never before was a sports icon's dominance so complete on our television screens. But the Mascarenhas-Tendulkar deal changed the topography of brand endorsement in sports, especially cricket. By the end of the decade, an entire player management industry had been born in its wake. Sachin's Midas touch with brands rested on the laurels of his on-field talent, but they were also a product of the times. After the economy was opened up in the early 1990s, foreign brands had begun to make an aggressive foray into the newly opened up Indian market, and they needed a face to connect with the Indian audience. Soon, with Atal Bihari Vajpayee's government pushing for the ideal of Swadeshi in a liberalized Indian market, Tendulkar became the perfect example of Made in India brand that was also global in its reach and appeal.
Sachin triggered off the commercialization of sports people in India. Cricket as a driver of the masses and the driver of viewership had grown many folds because of multiple factors. So it's not only that there was a deal, but the deal was done in the context of a far larger audience that was available to cricket. Amount of cricket that you were watching, increased again by many times over. So it's a function of both visibility and availability of the sport before the sportsman can start to become a bigger entity.
So, can Sachin Tendulkar be called the father of brand professionalization in Indian sports? Experts believe while his contribution is immense, the new age player brands like MS Dhoni, Rohit Sharma and Virat Kohli are also buoyed by the great transformation in brand endorsement that the Indian Premier League introduced.
I think the environment has changed. IPL came in during the tail end of Sachin's career. And again, IPL created a kind of a seismic shift in television viewership. It made it not just a sport, but it actually made it a spectacle. And second, of course, the sheer ubiquity of these faces, because of the amount of cricket that was being played, test matches, T20 formats, one-day internationals, IPL, etc., made them more familiar, which I think to some extent explains why they're endorsing brands now which have no real obvious linkages with cricket or sports.
Experts also point out that the endorsement profile of stars like Dhoni or Kohli is much more diversified, spanning across sectors like fashion, health drinks, home appliances, auto, building materials, and FMCG. A study by American corporate investigation and risk consulting firm Kroll reveals that in 2016, Bollywood stars constituted 81.7% of the overall brand value for India's top 20 celebrities, while the remaining 18.3% was comprised of sports stars. However, in 2022, the share of Bollywood stars has fallen to 67.6%, with 28.9% comprising sports stars and the remaining 3.5% belonging to Tollywood stars. Leading the charge of the sportsters is of course Virat Kohli, who has remained at the top of Kroll's Celebrity Brand Index for 4 years in a row, before falling to a second spot behind Bollywood celebrity Ranveer Singh in 2022. Tendulkar meanwhile makes a re-entry at number 8 this year. Experts believe that the sports endorsement space has changed massively in the last 2 decades, and the rise of modern-day players like Dhoni and Kohli have pursued their own style of brand building thanks to this. However, they do maintain that none of this would have been possible had Sachin Tendulkar not shown the way. Big brands like Dhoni and Kohli are sweating it out in the ongoing season of IPL. And their fans are flooding the stadiums to see them in action despite the searing summer heat. Meanwhile, heat is playing havoc off the field too. Power demand has already touched a record high of 216 gigawatts this month, and analysts project this will rise further. So, will this provide a fillip to shares of power distribution companies, or are the positives already priced in by the markets? Nikita Vashisht brings you a comprehensive picture.
As temperatures began to soar in India, shares of power generation and distribution companies too gathered steam on the bourses. Over the past 2 months, shares of Reliance Infrastructure, Torrent Power, and Power Grid Corporation have surged up to 24% on the NSE. NTPC and Tata Power, meanwhile, have slipped up to 3%. By comparison, the Nifty 50 and Nifty 500 indices gained about 2% each. Analysts believe there is headroom for further gains for these stocks as power demand is set to hit record peaks this year.
Summer heat is only going to get worse in the coming weeks. And since economic activity continues to remain strong, power demand for commercial and industrial users will remain high. Therefore, power consumption will remain strong and robust going forward. This spurt in power demand augurs well for power companies. Fundamentally strong companies like NTPC and Tata Power should do well.
On April 18th, India's electricity demand touched a new high of 216 gigawatts. In just the first fortnight of April, energy demand has risen by 23% year-on-year, indicating a sharp rise in use of cooling equipment. According to industry estimates, power demand growth for financial year 2022-23 is expected to remain around 10%. For FY24, rating agency CRISIL says soaring temperature and resilient economic activity are expected to keep power demand growing. On average, the first quarter of the fiscal should see power demand grow 4% on year on a high base of the previous year. These developments, analysts say, augur well for stocks as they are yet to price in the likely positives.
Similarly, the Power Ministry has asked NTPC to operate all its gas-based power plants to full capacity to generate 5,000 megawatts of additional power during the summer season. The ministry has directed GAIL to arrange gas for the same. The recent decline in gas price is expected to improve the gross margins of NTPC, while the increase in PLF will improve the asset sweating and operating profitability of the company. Power transmission companies will not get any direct benefit from the peak power demand, as their revenues are based on fixed annuity model. However, power distribution companies such as Torrent Power, CESC, Adani Mumbai Electricity, etc. are expected to gain the benefits of the increasing power consumption.
Brokerage firm MK Global 2 has buy ratings on NTPC with target price of 200 rupees, NHPC with target of 51 rupees, CESC with target of 101 rupees, and Power Grid Corporation with target of 250 rupees. Overall, outlook for the sector remains bullish as power demand will surge in the next 6 to 7 months, driving further gain. Besides, the regulatory support for companies provides a smooth runway to growth, boosting earnings per share outlook over FY23, FY25. On Wednesday, Q4 results of Bajaj Finance, HDFC Life, Maruti Suzuki, and SBI Life will be tracked by investors.
The heat is on in space as well. The private sector is rapidly increasing its space exploration efforts and is tasting both success and failures. One of the space vehicles designed by Elon Musk-led space exploration company SpaceX exploded soon after takeoff last week. But the engineers and scientists hailed it as an achievement. In today's Decoded segment, Tushar Verma tells you more about the space vehicle.
SpaceX CEO Elon Musk's prestige project Starship roared off its launch pad last week at the company's Texas facility with the promise to take humanity back to space. 3 minutes into its first flight, the Starship exploded over the Gulf of Mexico following a self-destruct command from Mission Control. Self-destruction was necessary because only 25 engines out of 33 fired at takeoff. This obstructed the first stage separation. While the inaugural mission didn't go as planned, the liftoff and its successful failure was a newsmaker around the world for obvious reasons. Starship is the most powerful rocket ever developed and is designed to be fully reusable. The spacecraft and its super heavy rocket, collectively referred to as Starship, is being designed to carry both crew and cargo to Earth orbit, the Moon, and deep space. It can carry an impressive payload of 150 metric tons in reusable form and 250 metric tons in expendable form. Its maker, Space Exploration Technologies Corporation, or in short, SpaceX, was founded by Tesla and Twitter owner Elon Musk in 2002. The company, as the name suggests, designs and manufactures rockets and spacecraft. In multiple forums, Musk had said he aspires to reach Mars and colonize the Red Planet. SpaceX, in an almost fairy tale yet realistic manner, is a step in that direction. Starship is one of the 3 spacecrafts built by SpaceX. The other launch vehicles are Falcon 9 and Falcon Heavy. While Falcon 9 is a 2-stage reusable rocket for reaching Earth orbit, Falcon Heavy is made up of 3 Falcon 9 rocket engines. It is designed to deliver heavier payloads than Falcon 9. Remember Elon Musk's Tesla Roadster in space? A Falcon Heavy rocket carried it to outer space in 2018. US space agency NASA has tapped Starship for its upcoming Artemis 3 moon mission scheduled for 2025. Following that, Starship will ferry human crews to the lunar surface and back for NASA's Artemis 4 mission. But can the Starship take humanity to Mars and beyond? The people at SpaceX believe the Starship can. The spacecraft fuel can be refilled in low Earth orbit, which can enable the 100-ton transport to fly to Mars and back. Its high reuse capability will also keep the cost of the mission affordable. SpaceX is one of the few private space exploration companies in the world with interstellar ambitions. How technologies around the spacecraft and its capabilities evolve is an exciting future to witness.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Repairing the damage to Texas launch site due to Thursday's explosion may take months, potentially delaying further launch attempts. That's it for today. For more news and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.